Hi, it's Richard Hemming, founder of Under the Radar Report. It is great to be with you. Welcome to ASX Stock Pulse, where we break down the stories that matter before the crowd catches on. So today I'm going to give you insights into the week ahead, and boy, is it a big one. Two expressions come to mind: take profits, bank dividends. So we've got into the meat of the earnings season continuing on from last week. We're likely to see a continuation of what we've seen, which is definitely a mixed bag. It's no longer a case of rising tides lifting all boats. No, it is stocks very much fending for themselves. So it drives home the point we continue to make, which is that it's the price you pay for a stock that determines your return. So being a value investor now matters more than ever. Simply jumping on the momentum trade is not working. So let's talk about one of the big areas where return variations are very high, and that is retail. And boy, is it a big week coming up. And this is definitely a case where we're seeing sort of stocks moving all over the place. This week we've got Coles, Woolworths, Wesfarmers coming out with results, the big three. So these companies' earnings reports are not just important from a shareholder perspective. They really do tell us what's going on with the Australian consumer. More than any other stock, more than any other data, this is real time. So they say essentially what's been happening in July and August, and we have to listen. So all eyes will be on that. So casting a dark shadow over the market definitely is the deteriorating sentiment around property. Housing is too important an asset in the Australian economy not to have an impact. It is like the leverage factor is huge, the sentiment factor is huge, the wealth effect is huge. 60% of Wesfarmers' earnings comes from Bunnings, whose earnings growth in the past few period have slowed to a walking pace. So if you don't perceive your house is going to be worth more, why would you do any home improvements? So this is a big factor. So we'll be watching out for Wesfarmers, and certainly, taking last week's evidence into account, in the words of JB Hi-Fi, people are value orientated and promotion driven. So it'll be interesting to see how that expression plays out this week. So the places not directly affected by consumer spending are gaining more investment interest. Last week, we saw that clearly with CSL, which spiked close to 30% on pretty much doing what they said they were going to do. This is also a case in the blue chips that we're recommending. Like, we're recommending companies that aren't reliant on consumer spending, on discretionary spend, stocks like AGL, stocks like Origin. So have a look at this week's blue chip report and see what I'm talking about. But on the other hand, stocks that aren't reliant on consumer spending or consumer discretionary spending are definitely the miners. These stocks have had an unbelievable run off the back of commodity price rises. Like, these companies do pay dividends, but, you're looking at share prices that have way exceeded the dividend factor. Like, BHP has appreciated or returned something like 60% in the past 12 months, and that acceleration has certainly occurred in the past 6 months. Mathematically, that cannot continue. Like, these are avenues for taking profits, I would argue. South 32 comes out this week. The stock's returned about 85% in the past 12 months. 85% in 12 months. Think about it. Like, I might add, the important factor that we always talk about it Under the Radar Report, and that is we don't normally sell the entire position when we're taking profits. We typically, our phrase is take your costs out and let your profits run. Like, in our small cap portfolio, we've done this. We've taken profits in Evolution Mining. We've taken profits in Southern Cross Electrical. We've taken profits in Superloop. We've taken profits in Austal. Most of these stocks are still really adding positively to our portfolio performance because the stocks keep performing and we're leveraged to the upside. So think about that. Keep your exposure to mining is my advice, but take some profits along the way. The same could be said for banks. Look, you take the profits when the news flow doesn't give you reason to. Like, think about it. So sometimes a plethora of good news, well, yeah, it's more than priced in. In fact, it's priced like it's going to be good news forever. It stands to reason to take some profits, because when there is new news flow that gives you reason to sell or to take profits, it's more than likely you'll be in an avalanche. So everyone else will be taking profits as well. So you won't make nearly the same return. So think about that, and I'll look forward to talking to you soon. Richard Hemming from Under the Radar Report.